everyone. Welcome to New Orleans Home Search Podcast. I am so excited to be on. As you know, we missed last week due to the rain. Did not want to have any technical difficulties and definitely wanted to make sure you got all this information that we have for you today. As you know, this is Jewel Bakewell with Crown Jewel Realty, New Orleans Home Search Podcast. We talk about everything real estate, everything New Orleans. And today we're talking about something very important, and it's taxes. I know it's not the most sexiest thing to talk about or interesting, but it's definitely necessary if you plan to purchase a home today. So I want to introduce our special guest, Mr. Brian Joubert. Hi, Brian.
Hey, Miss Jules, what's going on? Hey,
Brian, can you tell all our listeners about you and what it is that you do?
why you on here lying to people, man? Telling people taxes ain't sexy and taxes ain't interested. And but know what's funny about that? Every time I speak, and I speak a lot. And every time I speak, everybody be thinking like, oh, taxes. And I always tell them, I say, I guarantee you this ain't gonna be boring to you. And they be like, oh, this is one of the best sessions I've ever been to. Because the thing is, I make taxes sexy, man. So don't be telling people taxes ain't sexy or interesting. Because when you start finding out to keep more money, that's sexy.
Yes.
All right. So a little bit about me. Actually, I'm 25 years in the tax business. My name is Brian Joubert. Like I said, I specialize in business taxes, home taxes, real estate. I'm located in Atlanta now, but I'm 20. I'm still a NOLA boy. So I grew up in New Orleans. Holly Grove. Went to Joseph S. Clark Senior High Preparatory Fundamental Academy. And so moved to Atlanta. And I've always had a sense of purpose. I always say New Orleans put it in me. Atlanta brought it out me, and I love this tax industry, man, but not even just the tax industry. I love building businesses, and so I've been blessed enough over the last 25 years to be in the tax business, but to be an entrepreneur over 30 years. And this is my passion, and everybody think Richboi. A lot of people call me Richboi and they think it's about my lifestyle. And it's not totally about my lifestyle. It's about my passion. And my passion basically is really interested in caring how businesses operate internally. So it's Richboi with an I, really interested in caring how businesses operate internally, because I love doing this. I love teaching. I love educating. I do believe entrepreneurship is the way to freedom, ownership. And this is why I love real estate people and I love people in the industry. And that's why I fight for y'all, because y'all are the key behind ownership: land, property, homes, rental property, buildings. And so this is what we need to really create wealth in America. So I love doing this, man. I'm honored and pleasured to be on the show and talking to one of my homegirls too. So that's a beautiful thing.
I'm so happy to have you here and super excited because this is tax season. So it's no better time to talk about these things. And I've been running into situations with a lot of clients, especially my self-employed clients. They write off a lot. So they're writing off all these expenses. And now that it's time to purchase the home, it doesn't look like they made enough money to qualify for what they're looking for. So what advice can you give these buyers who are maybe self-employed and they know they want to purchase a home soon and they're about to file their taxes?
Oh man, that's so common right now. And like I said, because I deal with so many people in the real estate industry, and now I've made my mark with lenders and financial companies and mortgage companies, because they send me so many business. They send me so much business because they get all of these clients who's looking to purchase, looking to refinance, but they can't, because like you said, they write off everything. And so this is the one thing I have to tell people is you got to really be proactive in your thinking when it comes to taxes. My first question is, when I work with business people, my first question is, what's your goal? You got to have somebody that's going to ask you, what's your goal? Because see, people are so refund driven. They're not thinking about they buying that house next year or 2 years down the line. And what happens is you need 1 to 2 years of taxes to qualify. So if we get in there and we thinking about you getting a big refund and we write off everything, yeah, you walking out my office happy, but then you coming back saying, well, nah, you messed my taxes up. They said I can't qualify. And I'm like, no, I didn't mess your taxes up, and nobody messed your taxes up. This basically what you wanted at the time. So we got to start thinking about what we're trying to do 1 to 2 years down the line. So when you deal with tax people, I always say there's tax strategists and there's tax preparers. A lot of us have tax preparers, and they're not going to ask those type of questions. Strategists is going to ask those questions because they're trying to put you in a better position going forward, because they're going to come up with strategies. So, we can talk about that. I don't know if you want to get into it right now, but it's a loophole that's been around for years. And I know exactly what you're talking about because I see it every day.
And also, I wanted to, of course, I'm a real estate professional. We always want to know, what are some things that maybe we're missing out on that you see, hey, you're in real estate. This is something you should know about. Or this is a tax benefit that not a lot of people use in the industry.
Well, the one thing I always say, real estate agents are my worst clients. So I tell people you could go back 10 years, 15 years. I've been saying that forever. Like, real estate agents are my worst clients. And I say it openly. And I say that because you guys make a good bit of money and none of the money is taxed up front. You get 1099s. The problem is all my real estate agents come in and say, well, Brian, I don't want to pay no taxes. I'm like, oh, great. What did you keep up with? Did you keep up with anything? Well, no, I didn't keep up with nothing. Did you put money aside for taxes? Well, no, I didn't put no money aside. Can we just write off, a lot of stuff? I'm like, but you know how much it takes to write off. You done made $150,000 or more, and you won't write off $100,000 worth of deductions, and you don't keep up with nothing.
I feel attacked.
And so, and you probably are though. So, but see, the beauty of it is I'll attack you and then I'll help you up, and so that's the beauty of it. And that's why I say real estate agents are my worst clients, because I've been dealing with this for years, but now I'm working with a lot of them, they getting it. And so I've partnered with a lot of brokers, because what I do is I come in and show you the things you're missing. Like one thing that your biggest expense and best expense is your mileage. Your mileage. Nobody ever tracks their mileage. And the reason why the mileage is so good, because the mileage is what they consider a not out of pocket expense. So it's not a dollar for dollar expense. This year, the mileage rate is 56 cents a mile. So that means if I just drove 10,000 miles, which is not a whole lot as an agent, that means I get a $5,600 deduction. That's a beautiful thing. But see, the beauty of it is now when I go to buy something, I go to invest, buy some rental property, refinance, they call that what they call basically a putback. So I can now use that $5,600 and it's not working against my income, because see, all them deductions I write off lowers my income. But see, mileage and depreciation is one of those, a couple of those things that don't lower my income, that they're going to actually factor back in. So mileage is something you definitely want to keep up with as an agent. Your cell phone is something you definitely want to keep up with as an agent. Your lunches and dinners, and the beautiful thing about lunches and dinners now with taking clients out and meeting people on deals is it's 100%. It never been 100% write-off on a business lunch or dinner before. It's always been 50%. So now it's 100% that you can write off. So now you have, your mileage, you have your cell phone. A lot of y'all have home offices. People don't keep up with the money they put into their home office, and then knowing the square footage, and so those are some of the more common things that you really need to keep up with as an agent. One of the things that I've been teaching my agents and even business owners, the biggest loophole is LLCing yourself as an agent. And then after you LLC yourself, do what we call an S corp election to be taxed as an S corporation. So have your broker. And so since you're the broker, your agents would actually do this, and you would just pay to their tax ID number and to their LLC. But same in your situation, you would actually, as a broker, create your business as an LLC with an S corp election, because the beauty of this is you get basically the self-employment tax is 15.3%. So this is why agents are getting taxed so much, because if I show any income as a profit, I get
Mhm.
double taxed. I get double taxed as an agent. But if you use the S corp election, you pay half the taxes, but you show the same amount of money. And so the beautiful thing about this is that for business owners and everybody in this position, now I can go buy this property because I'm not worried about writing everything off. Most of the time, why most people write everything off, because they don't want to pay that much in taxes. But if I
Mhm.
learn this technique, and I ask all my agents, have they read Rich Dad Poor Dad? Because first of all, Robert Kiyosaki, the author of that book, he's very big into real estate.
Mhm.
Secondly, he's the one that actually told people this 23 years ago. This game has been around for 23 years. We just didn't know it, about how you can save so much money as a corporation, and having your business taxed that way. And so it's the biggest loophole out there, because now I can show the same amount of money, pay half the taxes. Now I can go get money. I can go get a property. I can go get a building. I can go get all of these things and don't get crushed on taxes. And that's the game, is play with other people's money.
Exactly. And that leads me to investors. I know you brought up depreciation as one aspect of a tax benefit, but I have a lot of investors. They purchase these multifamily properties. They may have apartment buildings, or even they're doing fix and flips.
Mhm.
Now we're at the closing. They're getting this 1099, and they're like, "Oh, wait, I got to pay taxes on this money I'm making." So let's talk about that. What advice do you give the real estate investors?
The investors, a lot. I speak to a lot of investor groups. In fact, I got a investor group, and what I normally tell them is, first, you gotta again set yourself up like a business. We so busy hustling to where we never really set these things up. And so when people 1099 us, they put it under our social. Set it up as a business, and then take advantage of all of this money that you're talking about, like the fix and flips. Keep up with all of this. A lot of times we don't keep up with nothing. And this is why I tell my investors, you got to stop bootlegging. You got to stop bootlegging. You got to start, when you deal with these contractors who's fixing your properties, and deal with people that's going to be able to give you in a receipt, who are going to be able to take credit cards, so
Mm-hmm.
you can track all of this stuff. So you need to start making sure you monitoring this, because once you basically do that fix and flip, you got to offset that money. So any capital gains you get, you can offset it with any money that you put into it for anything at closing that you have to spend money at, but all your contracting fees, your supplies that you had to buy for it, all of these things. So I would tell them, just make sure that you deal with somebody that's reputable, that that can give you a receipt or invoice, or even take some type of credit card or something that allow you to be able to track everything you spend, because a lot of times they spend a lot of money.
They do. And I learned the hard way. When I have work done, I'm getting them to fill out a W-9 if I'm
Yeah,
paying them over $600. Because later, good luck getting the W-9. After they've been paid, chances
yeah.
are you won't get it. And that's something that you're gonna need for your business.
Yeah, and the thing is, we got to learn as we start getting older and we start becoming more savvy in business. You got to stop looking for the friendship hookups and stuff, because you're doing business
Uh-huh.
now. You can't be trying to do no multi-million-dollar deals with people that ain't really gonna have a paper trail, that ain't gonna be able to give you stuff, and trying to do everything under the table. And I ain't saying
Right.
that you can't work with people, but when you start making moves like that, you got to protect yourself in a sense. So you got to have traits. People say, well, can you just pay me in cash? And, no, because I need to offset the taxes I'm going to have to pay on this deal. And so
Yes.
you got to start dealing with people like that. And it's nothing personal, but it's business. And we got to understand, as we start making bigger moves, you got to start dealing with a different circle of people.
That was a word right there.
Yeah. Yeah, but but we hate to, and this is why I say the tax professional versus the tax strategist and the tax
Uh-huh.
preparer. Because I understand your girl is a hell of a nail tech, and she do taxes on the side, but she might not be the best person for you to move forward. Your loan guy does taxes, during tax time, but he might not be, he's a good loan guy, he's a good person, but you got to deal with people that actually do this, man. And I ain't saying me, I'm just saying somebody that's reputable, because your money, your situation depends on it. And like you say, after stuff is done, good luck with trying to get shit done after that.
Yeah. So, what you think is the main thing that everybody leaves on the table? I know we covered some really good points about mileage, about keeping track of dinner, receipts, and expenses. But what's something else that you find that when people file their taxes, this is something they should be, listing or keeping track of, but they're not?
Um, from a business standpoint, like we don't, like, a lot of times we don't keep up with travel. Like if you're in business and you're doing
Mm-hmm.
some traveling, it's ways that you can be strategic in that to kind of make that business expenses, especially people who are in real estate and investing in agents. So it's strategic ways that you can actually, and I think a lot of people leave it on the table because if you go to certain places and you look at you start going out looking at some real estate in different countries and different things, you can strategically set that up to where now that becomes a business trip. And now you'll
Yeah,
travel as an agent, and so this is
yeah.
why I try to tell people I've been, I've probably been more places than anybody in that most people can think of or ever know. I'm going on my fourth passport. And so, but I tell people I've never taken a personal trip.
Hmm.
And so, I've never
That's
taken
a
a,
big point. I'm
yeah,
glad you brought that up because every time it's time to evacuate for a storm, I'm doing something in real estate wherever I am.
yeah. And that's the thing, and so it's
Uh-huh.
ways that that we can talk about, probably not tonight because that's a whole topic in itself. But people
Right.
just got to be strategic. And what I always say when you talk about writing up, know what you can and cannot write off. And that's the thing is I have a list on my website of all the business deductions because most people don't have no idea the things they can write off. Because I think another thing when you ask what people miss a lot of times, people miss advertising. People miss advertising a
Mhm.
lot because they don't think about it when people say, well, do this ad for me $100, it's just $100. We'll get you in the school, the school booklet. My son got a football team, it takes $200 to get an ad. And, you do all these different things and you go to these events. All that stuff is
Mhm.
advertising. And a lot of times people really don't think about it at the time, but all that can be written off. So you got to be conscious of that. Anything that you do, and use a business debit or credit card to track everything. This is why I tell you to get legit, get a LLC, get a bank account to match that, and see if you use everything through that bank account, then you don't have to try to go different places to find receipts and stuff. And it helps you track stuff a little bit better because if it's all in one house, I can go get it out of the one house and I have a better record keeping. So now if I do need to reduce my income, I have a legitimate tracking system. And I think that's where a lot of people lose out because they pay cash here. They put one thing on the credit card here. They put another thing on the debit card. So when it's time to ask you about your deductions, they have no idea because they're going to 3 and 4 different places to try to find out what they spent. So little things like that would definitely help you and not miss no deductions.
That's a big point. That's a big point. And I also wanted to ask you about Cash App and Venmo and all these sites that we use to transfer funds back and forth with our businesses. How does that correlate with taxes? Because I just did a loan and the underwriter actually asked my buyer to specify each and every transaction on her Cash App. So I'm just wondering, how is that translating over to the tax world?
Wow, like that's a new one on me, but this is why they're cracking down, and that's going to be a game changer because what happens is now they changed that law. They just recently changed that law because you didn't have to really report. Well, I ain't gonna say you didn't have to report because all business income you're supposed to report. But the thing was, they didn't send you no type of form. If for one with Cash App, PayPal, Zelle, Venmo, any of those that you receive money through, they actually didn't. You didn't have to get any form. They have what they call a 1099K. That's the form that they gave most people when you had to report anything that was done through credit card or third party. But they didn't give it to you if you made less than $20,000 on one particular platform or if you had under 200 transactions. Now, very like you had a lot of people who actually did money on each of them, but it never added up to 20,000 or 200 on either one. Now that's about to change the game because the new law is under Cash App and all of those. If you basically did one transaction, so it went from 200 to one now, you get in the form. If it was over $600, so they went from 20,000 to 600 and from 200 transactions to one. So that means now anybody that's doing business, that's doing Cash App, Zelle, PayPal, any of those, that's doing one transaction over $600, you're now getting a statement. So now you're on books with the IRS. So that's going to be a game changer for taxes because so many people didn't report that money. And now you're going to have to because it's on paper.
Yes. All the IRS has their ways of getting.
Oh, yeah. They say they losing too much money, man. They say they losing too much.
Uh-huh. So I know it's a lot of information. Thank you. You're like a wealth of knowledge. But I really wanna know, like, allow you to speak on, with the world of taxes. You're out there every day talking to people. You know what we need to hear. So I'm just gonna let you take the floor and tell us what we need to hear about this. What should we be doing?
Really positioning yourself for where you want to be in the next year or two. And this is what I tell people, because as you start getting older, your priorities start to change. You start thinking about now investing. You start thinking about buying a house. You have to start thinking about those type of things. So all I tell people, get with your tax professional and start saying, this is where I want to be in the next 2 to 3 years. This is what I'm trying to do, because you got to be proactive in this stuff, because everything is changing now. And so, like I just talked about, all these third-party vendors with Cash App and all, you got to be proactive. I want people to start tax planning. Tax planning means I don't wait till December to start asking you questions. I don't wait till the tax season start asking you questions. You need to start now asking people about the whole year, so that way next year you'll be ready. Because now if I got a 1099 from my broker, if I got money that I'm getting in business from people, plus they're going to tax me on any Cash App that I have, any PayPal, that's money that I didn't account for in the past. So that means now I got to make sure I account for that money now. So I might get another 20,000 through all of those other places. Now, if I get $20,000 and I don't plan for it, I don't structure my business purposely in the right direction, what happens is I add another 20,000 that I'm gonna get double taxed on. Because again, like I said, if your structure ain't right, if you're a sole proprietor, independent contractor, a single member LLC, you're paying double taxes on that money. And the one thing that people always say is, my person is good. They don't never let me pay no taxes. I don't have to pay no taxes. But I guarantee you probably ain't showing no income. And you probably can't make no moves, and so I just actually purchased a building where my office is. And, people ask me about the strategies, and I'm like, I got to give them something, so when I tell people what my tax bill was, I ain't even tripping on that. Like, my tax bill was $28,000, but I ain't tripping on that, because again, if it allows me to buy $1 million asset, the money that I'm gonna make from that, I can pay off the 28,000. And I'm just saying, I don't expect people to be that extreme, but that's kind of an example how we have to think. Like, we thinking about the 28. I'm thinking about the million, the value of the building. So now think about, when I sell, I cash and I refi, I do whatever, that's 28,000. That's nothing based on if I got now equity of 400,000 or more. And this is how we have to think. You got to think. You got to change your mindset when it comes to taxes. You got to change your mindset when it comes to being strategic. And if you learn how to pay half the taxes, you're gonna be in the game much more. So get you a tax strategist, man. And I know we got loyalty. Sometimes we loyal to a fault, because if a person can't take you where you need to go, I don't care if it's kinfolk or not, you're gonna have to let them go. And it's nothing personal. And if they get mad that they can't help you to get where you need to go, and they mad and they can't do it, then that ain't no love right there. Because they should give you their blessing to say, well, know what? I know what you're trying to do. That's beyond me. I don't know nothing about that. So you might need to find somebody. That's blessings. That's what you got to have now when you start making moves, because you can't do and file your taxes the same way you was doing when you was 21, 22 years old, when you didn't have dependents, when you didn't have ambitions to buy buildings and houses and refinance and all those things. So you got to do something different to get something better.
Brian, tell my listeners how to get in touch with you.
All right, so y'all can hit me up. You can follow me on IG, man, at Richboi, RICHBOIJUP1. If you got questions, you can hit me up initially there, but to submit any information or call me at the office at 678-213-1141. And my website is lbtaxservice.com. And so lbtaxservice.com, I answer a lot of your questions, because when we talk about deductions and what to write off, all that stuff is on the homepage. But if you got questions on that, give us a holler, man. And like I say, I love doing this. Like, I don't mind. I don't care if you in the industry I'm in. I just want people to be educated, especially my people. I want my people to win, man, because I'm going to eat regardless. I always say this, I'm going to eat with or without you. I always have, I always will, but let's eat together.
Yes, and I'm so glad that you're so open with this information, because I feel like so many times people are like, oh, the game is to be sold and not told. They want to keep these things to themselves, and it's time to share it with our people to create generational wealth for all of us, and also so more of us can be in a position to buy buildings or to do crowd funds or syndications and put our money together and really make it work for us. So I really appreciate you just being so open with everything. And I want to advise everyone to check out their website with all the information that you need. I'll also have the website on our platform at Urban Smart Network. And Brian, thank you so much.
Nah, I appreciate you, man. Thank you for giving me this opportunity, this platform. I love it anytime, whatever. If it's changes and you need me back on, just holler at me.
I will. All right, y'all. So thank y'all for tuning in. We're going to get back on schedule next month in March. Our first podcast will be March 3rd, the first Thursday of the month. So thank you guys for joining New Orleans Home Search Podcast.